Hi everyone, my name is Hazel. I'm the Chief Trainer of the Joyful Investors and I'm also an SGS Academy trainer. So myself, together with my team of coaches at the Joyful Investors, we seek to empower retail investors who are on this journey towards financial freedom on how to invest more prudently to take care of your risk management so that you can achieve better investment outcomes to build wealth sustainably over the long term.
Hi, and I'm Sean. I'm actually working for Forex.com as a BDM and RM over here. For almost 4 years, I have a decades of experience in CFD tradings. So mainly I deal with retail investor traders as well out there. So sharing their experience for retail investor to know what is trading all about compared to investor as well.
So this series, I think, is really interesting because together with Sean, we're going to be talking about some topics I think is useful for beginners, for people who are already in this investing journey to find out more about both investing and also trading. So Sean will be sharing more on the trading aspect, while I'll be talking more about the investing. So that will give us a more balanced view of both trading and investing and where are the overlaps and the differences in the financial markets. So Sean, how do you think a beginner can start off in this journey without feeling lost and overwhelmed?
All right, I think it's completely normal for beginners to feel lost. Ultimately, it's their first time, coming into financial market. So to reduce this overwhelmed feelings, right? What I can say that you need to start things simple as possible. You need to have this kind of structured trading structured, so it help you to reduce all the noise in the market. So my advice is don't try everything at once. Go one steps at a time, so you will have a more clear picture what to do next. So for example, because I'm more handling on retail traders, so what they do is, for example, more retail traders relies on technical analysis. Why not on the fundamental side? I think it's more easier and visual for looking at the chart at the start, right?
Agree.
So what you need to do is just start off with one simple indicator, and then you work on your chart, and then you filter out the noise. Ultimately, is to see what does the chart show you instead of try to predict what happened to the market itself.
Okay. Yeah, so I mean that is something that I totally agree on. So for me, maybe let me share 4 simple steps
Yep.
that beginner investors can do. The first one is really simple. Today, if you're looking at investing, so Sean just shared about trading, right?
Okay.
So on the investing side, if you're looking at investing, firstly, take a broad view. Zoom out, because what you'll realize in this journey is that there are a lot of market news and noises. They don't really matter over the long term for when it comes to an investment portfolio. So take a zoom out view. So that's the first one. Some are noises, some are useful information. So you need to see how to filter out. The second step is like what Sean mentioned, to start off simple. And for investing, simple, what does it mean? It means as simple as, maybe start off with understanding more about a company business first, rather than to be overly fixated on every single piece of news. Understand how the company makes money, what makes its products and services, the demand stable or unstable, finding out its competitive edge. So understanding that, I think, is even more important. In fact, in investing, a lot of people want to go and find those hidden gems, right?
Exactly.
Names that you have never heard about. Wow, but that is really difficult, because if you never hear about this company, there is a high chance you might not be able to really understand its business model fully. So why not just focus on familiar names and then slowly understand them? Thirdly, is to make sure that whatever investing decisions, whether it's buying or selling, it is done based on a proper framework, investing strategy, not because of hype, like not because what your friends say. I hear this stock tip from online, I see this on forum. Yeah, that would be very risky. Yeah. And finally, the last one is that you don't have to actually do this alone. Whether it's speaking to your friends, like-minded friends, a community of like-minded investors, having a mentor to guide you in this journey, I think that will really help you to stay focused in the journey and to filter out some of these noises in the market.
So coming to that, right, just ask you the next question is that when it comes to the market, how do you actually decide what information is actually useful for investor and what is just noise?
Yeah. So maybe I can give some illustrations on what I will constitute as noise and what is important information. So as an investor, I will say a lot of times, a lot of this macro news that we see out there, a big majority of the time, they don't really affect the fundamentals of the companies. They don't really affect the way that I buy or sell or the way I position my portfolio. And the reason, there are two. One is because this macro, it affects almost all the companies in the same industries, right?
Mhm.
So, or sometimes multiple industries as well. So, therefore, it's not like it's a company specific problem with this company only, but rather it affects everyone. It's just like, now we're in December, and December is like a rainy season, right?
Yes.
So, it affects everyone who is going out on the street. It affects Sean, it
Yep.
affects myself. So, we need to make sure we carry an umbrella.
Correct.
Yeah. So that's the mindset. And secondly, is because a lot of this macro news, they don't stay there forever because the
Mhm.
economy moves in cycles.
Mhm.
So, like, if the economy is doing well, at some point it will slow down, sink into a recession, and then recover. So, all this, they move in a cycle. Same for interest rates, it doesn't stay stagnant forever at the same rate. So, therefore, these are things that come and go. But the strongest of the companies will be able to go through that. Yeah, just like if I have a stronger umbrella, I can withstand the stronger winds. So that's the idea. Yeah. So this would to me more be of like noises. Yeah.
Mhm.
On the other hand, what is useful information is when it really affects the company. Like for example, it disrupts its profit making ability or it destroys its competitive edge. Then that is when this piece of information, yeah, is something you shouldn't avoid. You need to really look at it. And that is essentially what's important to me. That's what people have to actually be looking at. Again, if I can give an analogy, it's like we have been through education for 15 to 20 years here in
Yeah,
Singapore.
definitely.
Even the top student cannot do well for every single exam, right? There'll be times where he might do not as good because maybe he's sick, maybe he just feels extra nervous that day. But those are fine because those are temporary factors.
Yeah.
But if it's because he stopped listening in class, he stopped paying attention, he stopped doing his homework,
Mhm.
yeah, then those could be permanent issue that you want to be careful about. So for businesses, also the same thing. If it's due to that, something that disrupts the company business, the profit making ability, the competitive edge, then these are important permanent factors that we have to look at.
Okay, that's great. Well answer for
Yeah.
investor.
How about for trading?
Okay, so for trading wise, right? So for my side, what I see is that
Yeah.
the most market informations can be useful. Most of the information can be useful,
Mm.
but does it useful to you or not is another question.
Okay.
Am I right to say? So the key question is on your strategy. So for traders itself, they look more on the short term wise, like how does this piece of information actually help them in their trading, help them to improve their profit as well, their probability of making money as well. So for trader wise, on the other hand, short term noise, like example, non-farm payroll, CPI, FOMC, perhaps the interest rate, these will really move the market in a shorter time frame.
Yeah.
So if let's say you are more on the shorter time frame like day trading, intraday tradings, or swing tradings, I think it will does affect you in your trading strategy. But ultimately, you need to have a clear strategy.
Yes.
All right. It's not like you go and see which market actually help you to make more money, but it's whether the market news blend into your strategy to make more money from there or not. So the clear strategy is very important as a trader itself. So always the rule comes is react to your setup, not on every headline, but on the strategy that you are using.
Yeah. So indeed, when it comes to trading and investing, the way that we handle the news will be quite different. I think this is one aspect whereby it is really quite different. What about, when you were first starting off trading, right, Sean? Any challenges that you faced earlier or no, any lesson that you learned that taught you the most about handling all this uncertainty and volatilities?
Okay, when you first start trading, you know nuts, to be frank, you know nuts, all right? You don't know what is the lesson you're going to learn from the market because the market is so big. It's like an ocean, right? So, of
Yeah.
course, after experience a few trade, then you find out after looking back at your trade, there's one thing that teach me the biggest lesson is actual FOMO. So what is FOMO? It's fear of missing out, right? So that's one of my biggest lessons that I learned in trading because I feel that wherever I'm not in the trade positions, I feel that I'm missing out from the market. I may miss out of a lot of opportunity out there, right? So it led me to like keep chasing setup, find a setup to go into the market, always want to be participate in the market, and that is actually kill it. Even I got a good structure, but it just kill me off from there. So that is the lesson that I taught myself that I need to be very disciplined and need to be patient than just following the news out there. I need to be more focused, letting the setup come to me instead of me chasing them. So what about investor then? So what is the biggest lesson you learned in this journey?
Right. I really like what you mentioned about FOMO because I think actually that also applies to investing.
Mhm.
But let me share something else. So when I first started, let me be very honest. One of the challenges that I faced is I wanted to avoid risk totally. So I wanted to go and find an investment that is the safest. so that I don't risk anything, but I can still make money. But quite obviously, we know there isn't something like this,
Yes.
right?
Yeah.
I mean, if you're looking at risk-free kind of investments, most of the time they cannot beat inflation over the long term.
Mhm.
So you have to take on some level of risk, but what is important is you have to manage it. And I think it doesn't help because I come from a accounting background, right? So in accountancy, I'm taught that every number must reconcile, must balance. So when you have that kind of mindset, it's really hard to be a risk taker.
Every cents count, right?
Yeah, and we are taught we have to be conservative in
Mhm.
accounting. Yeah. But what very important lesson that I learned is that volatilities, they are here to stay. So we shouldn't treat volatilities like it's our enemy, but
Mhm.
instead treat it like your friend. How
Ah.
you manage your friendships, right? Volatility, you also need to manage your portfolio for volatilities. So volatilities move in both directions, whether we like it or not. So when it goes in the positive direction, where we have upside potential, that is where everyone loves it. But it's the downside that people are very scared about, right? So some people will pray hard that the market will never crash. But we know it doesn't help in any way lah, just by doing that. It will still happen. A market crash happen every few years. Market corrections are even more prevalent in the markets, right? So one thing that I learned is that in order to manage volatilities, I need to know what I'm doing. So what kind of companies am I investing in that I'm picking? So this is where I do my fundamental analysis. And then what price I'm buying at, this is where I do my technical analysis. So when I have a proper investing framework, right, that helps me to manage risk because both FA and TA, they are essentially risk management methodologies for us to help me plan. So yeah, so that's something that I learned in this journey, to learn how to manage the volatilities, to manage the level of risk that you take on for your investment portfolio whenever the markets are volatile.
Just ask you the next question then, where we are talking about FA and TA or managing volatility, right? So
Mm.
what small and manageable steps can someone today start to build confidence in their investing then?
Okay, I like it that you mentioned small and manageable
Yeah.
because there are a lot of new investors or traders. They try to rush into things,
Yeah.
right? Especially if I'm speaking from the investing side of point of view. There's some people who think, "Hey, my friend has already started. I'm actually lagging behind. So I want to make sure I take faster action now." And therefore, they try to rush into things. But most of the time, that doesn't really help or it doesn't end well for you. So taking small, manageable steps is important. So one way to do so is start with simply setting certain milestones. So let's say you want to learn about FA, fundamental analysis, or you want to learn about technical analysis, right? Or sometimes simply just understanding about the companies, do each of them one step at a time. So even for technical analysis, like Sean, you mentioned earlier on, you don't need to learn every
Yep.
analysis indicator all at one go. You can learn one at a time. After you learn, you apply it, see for yourself how it works or how it doesn't work sometimes, right? Then you can fine tune and add on the next one. So I think it's about taking such small steps to help yourself be able to see how it works out in the journey. And secondly, you might even want to consider using a paper portfolio at the start of the journey. So I do have some students, after they learn from us, they actually start off with a paper portfolio because they want to see how is it really like in the markets after they apply it. And I think it's good because it allows you to understand, okay, so when I make money, this is how I feel.
Yes.
Or when I lose money, this is how I feel as well. So that you can understand yourself as an investor much better. But of course, paper portfolio, you have to treat it as seriously as the real portfolio. Otherwise, you
The
wouldn't.
emotions, right?
Yeah, you must treat it as seriously. Then you will feel the real emotions and learn better about yourself as an investor, as well as all the experiences that's built up. How about for trading?
All right, for trading, right, I believe a lot of retail traders will straight away jump into the market, straight away jump into trading. I need to fund an account, I need to start an account, I need to place a trade immediately. But what I would advise for retail traders, for new beginner, right, if you totally got nothing, no experience at all, just block out 15 minutes of your times every day, look and understand the market first. Understand how the market flow, whether it be on FA, on TA. On FA, try to pick up a good few big company. I'll leave that to Hazel to say that. For TA wise, right, I believe you try to input one indicator, understand how does it work, how does the chart flow, then slowly build on another indicator. So most people actually skip this step. They always rush into the trading, try to make money from there, but ultimately they are the one that burn their portfolio, burn their account very fast. So the first step, not to rush into the trade, but to understand the trade first. Then from there you build on. Maybe start a demo account, which would be good as well. All right. So
So I think yes. So we spoke about FAs for TA. I think
Yes.
these are bigger topics that we can definitely explore in another separate
Yeah.
episode. Finally, for people who feel that they are left behind or they have missed the boat, missed the
Mm,
chance to
mm.
start, what kind of mindset can help them to move forward?
Okay, so for that, right, when you're feeling behind, I guess
Mm.
because you are comparing yourself to others,
Yeah.
right now, you try to compare. Hey, some people is, at my age, they're making good money, they have,
Uh,
drive a good car, stay a luxury life. But don't compare. Because when you
mm,
compare, you always feel that, hey, someone start early seems to do better, but you never know. People who start late may be the one that rewarding as well. So the truth is that the market doesn't reward to
mm.
person who start early, all right, but they reward to person who are consistent. All
Ah,
right. So the word here is consistent, right? So whether you're trading or investing, you never miss the boat. You
mm,
haven't missed the boat yet, to be frank. You're not late. You're just starting your own journey by yourself. So focus on building forward, but not catching up. All right. Start now with clarity, with purpose of what you want to move ahead, whether you're a long-term or short-term trader. Start to build, and then you step by step, you'll go to that. So what
mm.
about investing then?
Mm. I like the part where you say don't compare.
Yes.
Maybe because we're living in Singapore. Singapore is known for kiasu mindset. I'm not
And
sure whether it's still true now, lah. But yeah, as we grow up, we have been comparing, right? Compare grades, compare salary, now
all right.
compare investment portfolio. So the list of comparison is really endless. Yeah, so I totally agree. So we should never compare someone else chapter 20 with your own chapter 1. Chances are the person who's at chapter 20 also started from chapter 1. But
Exactly.
it's probably because he or she started earlier. He started to do this consistently in the right direction, and that's why he has progressed much
Mm.
further ahead. But if you're able to do this consistently, step by step, consistently, yes, you will also be able to reach there as well. So I think that is important. Because sometimes yes, while comparison does make you motivated to a certain extent, but too much of it can also result in emotions like FOMO, like
Yes.
greed, yeah, so which might cause you to make certain investing decisions that are unsound. Yeah, and on the point of missing the boat, I also agree that it's while it's better to be early, of course, but markets because there's volatility, so
Mhm.
opportunities are plenty. So
Yes.
maybe yes, you missed the boat on this company, this investment, but that doesn't mean there isn't other companies, other investment ideas as well,
Yeah,
right?
market go in cycles lah.
Yeah, exactly. In fact, every year, every quarter, every month, there is probably something for you to actually look at. So you don't necessarily have to just focus on that particular company to make money, right? You can still do it with many other types of companies and investments in your portfolio. So I think that is the point where you have to understand that there will always be opportunities. So don't think that you have missed the boat and therefore just give up and do nothing on trading, on investing.
Great.
Yeah.
Thanks for sharing on the investment side. And I believe on this chapter, you guys know about trading and investing. So anything for you to wrap up on this?
Yeah, so I think today's episode that we talk about, right, is essentially for the beginners, the novice investors or traders who are starting off on this journey and you're thinking about, with so many things around, I'm feeling very overwhelmed and lost. How can I get started? So that's something for you to understand and hopefully to guide you in this journey. But that's not the end because we're going to continue on with this series with much more episodes. And in each episode, we're going to dive deeper into another separate topic, like, technical analysis,
Yep.
like fundamental analysis. So we will see you again in the next episode.
Yes. See you guys. Bye bye.
Bye bye.